Good afternoon, guys, and welcome to my channel. Thank you so much for clicking on this video, but I got to do this kind of on the fly because time is limited. So tomorrow, I just wanted to let you guys know as the market goes higher and higher, I will be live for about 1 hour in the morning. No live stream in the afternoon for Rumble, just so you are aware. But we are heading up into that first test of the potential 50 here. And is this going to continue? One thing to note here on the daily scale, we are still seeing some major strength here, some pretty damn good strength here for your MACD on the daily scale, but hey, that is still negative if we see some kind of roll down. Now, the 2 hour chart is overextended. You can see from just really drawing a line across, holding the line across and saying, hey, around this area, sometimes we do just squeeze just a little bit higher or more move sideways at this time. So sideways or a little bit higher than coming down most likely will be something we're looking for. But if the 2 hour was to pull down tomorrow, that would make a lot of sense, right? If we get something surprising as we have GDP, as we have a bunch of earnings, as we have a bunch of unexpected things that could happen, we have to be aware of where our daily expected moves are. 562.51. We are pricing in more implied volatility. More volatility for tomorrow is priced in. 546.13 to the downside, still a very, very important level that can really save you if you're able to get back above that by the end of the day from seeing this thing cause you to go all the way down to that bottom side weekly expected move at 534.28. Now, do we see anything that really gives us the inclination of, hey, this thing can curl down on the 2 hour, right? We use those shorter time frames to give us little hints, and we see that the post market coming down. But overall, just so you know, this market is above the 5, right? We are above the 5. So if we're able to retest that and keep this thing going, that can happen. You are looking like you're in potential squeeze-like behavior here. So the game has changed a little bit. It means we want to be very cautious trying to just short things like it's going to have some kind of massive drop. If we see a massive drop, okay, cool. But that still would mean the 2 hour is positive and can just curl right back up, right? So the 30-minute here, what is it really saying? Well, as it stands, if we are able to curl this down in the morning, that would suggest there is divergence and that you could break down below that 5, and then we'd be paying attention for potential structure to actually head down lower. And this would be very interesting to create this type of head and shoulders, right? Now, how do you overall ruin this signal is you keep doing what you're doing right now, right? You just continue to curl up. You see, maybe a surprise from GDP. It comes in more positive than people expect because a lot of people thought it would be negative. The estimates are only at like zero point 0.4 or zero point 0.3, and the previous was like 2.7, 2.9 or something like that, 2.4, I think maybe. So that means we're going to see that. And is the narrative going to shift to, oh, this is a great earnings season? Is it going to be about tariffs, or is the overall narrative going to linger around recession, right? The slowing down of the economy, which would lead you to believe, hey, this 30-minute crossing down can send it into a negative trend. And that is where we'll be paying attention to that first point, the 546.13. If we see something surprising, well, then we can pay attention to lower levels towards 534.28. And we'll be able to watch this in the morning and see if we're able to whip this thing back up or not. Because we still haven't gotten that test of 562. And look at the daily expected move at 562.51. Very, very nice to get there. And we'll see if that's able to get there. But the 30-minute suggesting there can be weakness here. As we switch over to the Qs, same type of deal, right? We do see a little bit more implied volatility going into tomorrow for the Qs. And we see to the upside 483.61 to the upside and 467.45 to the downside. Once again, looking at that MACD, just holding it across. A lot of the time you start to roll over from these type of areas. A lot of the time that can just be sideways, right? We can get pullbacks in sideways. Going sideways can be a pullback, right? Pulling back with time. But looking at that downside move, hey, if this 2 hour crosses, well, we'll first pay attention to here. Then if we see something a little bit worse, we can pay attention to down here towards 455.14 for your weekly expected move. Do we have things that say, hey, this could curl over right now? You actually have extreme divergence here. So even if you do confirm this, when I map these out, when I look at divergence, I really see how significant it is. It is a point that we talk about in the course. The full technical analysis course is where we talk about it. And that's 80% off right now if you want to get that. But the significance of divergence is what we talk about. And it's more just a kind of eyeball of like, hey, is the divergence flat? Is it a little bit down, or is it dramatic? And so if this would confirm right now, the reason that I pay attention to that is because we're so close to going negative, and we go deeper into that in the course. But really, it's as simple as that. Significance of divergence is very important. And a lot of the time on the RSI is where I'm really paying attention to it. And I want you to see this right here. My goodness gracious, that is super, super significant at this point. So you do have some problems going on here, but you have to understand that this isn't a problem like, oh, we're doing this, we're going up to the 5 and we're going to see a crackdown like this. That can happen, right? But the game is a little different if you're above that 5, right? If you're above that 5 and you go through something really bad, you can see that snap back. So I'd be paying attention to that. We can see bounces still that then lead to the breakdown of the 5. So really, if we're losing the 5 and using that as rejection now, that's when I want to pay attention to the game being more like, hey, we're going to see selling beget, yeah, the rips get sold, the dips get bought, and the moves just go quick in both directions. So for the time being, you have 30-minute divergence. If we get some kind of earnings, if something like this happens, if you just randomly gap up on some good news, that's where you'll potentially have to make these signals again. Sorry about the barking. You'll potentially have to make these signals again at higher levels. So that would mean that all of this could need to be created here, meaning this could gap up, go to the upside, see something like this later on, and we'll pay attention to that in the future, just so you're aware. Now, for tomorrow, is there extreme risk? We've been talking about the dollar remaining very, very weak here, and that's why we don't really trust this move too much. The breadth is so good, so it's hard not to trust it, but the dollar not seeing that reaction, it really doesn't give you too much confidence in the move as it stands. HGX being pretty lackluster here, right, for the day, just overall moving sideways, right? Not necessarily giving you the most positivity. XLU, a lot of people mentioning to me XLU, going to a very important part where you could point where you could see resistance and creating, divergences of its own. So there's a lot of things to pay attention to, but one thing we really want to keep our eye on is volatility, right? Now, volatility for the time being, not a lot to go off of here. There's really not a ton to go off of here. If anything, you're just saying, hey, huge rejection divergences on the 2-hour that can cause a reaction. Now, why could this be an important level to get a reaction? Well, you're starting to get into that gap. So I think at the end of the day, we're going to make potential reversal signals down here, right? So if we get a pop off from the 2-hour, and then that's able to subside, and we see that maybe go to on the SPY, if the SPY price is here, and we see that weekly expected move, we see a 2-hour drop like this, and then we bounce. That could be this moment right here, and then we end up making some kind of reversal signal down by this gap fill. I think that would be something to pay attention to. But for the time being, do I see things from volatility that say like, oh, this is going to be some kind of mega crash right now? Just not necessary. You really don't see that at this moment. If the daily scale starts to whip up, we'll talk about it, but you're breaking down again below the 50. So I think, because the game has changed, maybe the reaction we do get here, if we even get one, we'll pay attention if the daily turns up on the MACD and we start to see closures above these moving averages. But for the time being, it really looks like we could see something like this, dip back to the downside, right? See some kind of 2-hour move, dip to the downside again, fill that gap, and then see if something sets up here for us for some real weakness. So something at the end here that I wanted to talk about was just how things on the daily scale like to reverse around, right? Because there are still risks. Where we're at right now, we're not here yet, right? We're not here, we're not here, we're here. Which means what? We're in the bottom side of that box. So if we're in the bottom side of this box and we start to reject from that box, that could be a big deal because that can tell us a lot about the next move, right? The next move could need to fill both of these gaps and then go test that low again in case it needs to really say like, hey, are we going into, did we price in the full recession here? And then this will really prove if that's able to cross back up and make a daily divergence, well, then that'll say, yes, the recession that they are talking about is overall priced in. We've been going down for a long time. So we want to see a retest of that low to really tell us, hey, this is priced in, or we exceed that, go to the upside and end up seeing some kind of higher low. That would be fantastic for the daily chart. So how can we see if the daily is going to cross down? Well, the 2-hour will make divergence. And this is where I wanted to point something out. If we go back and look at all these times, we can see divergences created multiple times up in these areas, right? Little double top, maybe action here, a little bit of divergence across if you extend it out, divergence right here on your RSI. I believe divergence here again on your RSI and MACD, actually just very, very tight. So a lot of these divergences that are created at these highs, you even get one right here on the RSI, a lot of them are what lead to the daily scale turning down. It's something we discussed thoroughly in that full technical analysis course, but for the time being, what do we see? We see one move, and that move is very, very positive. So if we're going to get that to curl down to here and just curl back up, that's awesome. If we're going to curl down to here, a lot of people would start to freak out, and then you see it curl back up on your MACD into positive territory. Yeah, that's potentially how we actually make the move to a higher point, So these are just some little things to pay attention to and understand that you're in a different kind of game right now. I understand during all of this time, right? Even this time right here, you're down, you're bad, you get a divergence, right? And you pop up. right? But if we really look at where that MACD was, look where it was compared to right now. So we have a lot of room to go. This would have to be really, really bad. Like you would have to see a pretty damn negative GDP and a pretty damn bad reaction at this moment to really shoot this thing and get some kind of unexpected move like this, especially when it comes to tomorrow, like seeing just a big bloody day tomorrow, like some kind of massive absolute teardown tomorrow. You're still within that 68% zone, right? We still have that 68% line, and that's where we will be updating you on those 68% zones, those 68% lines for all the stocks that we cover on this channel. If you want to join us over on Patreon, it's $7. It literally costs like a nice Starbucks cup of coffee, right? Take a little break from your white girl wasted days, your pumpkin spice latte for just one day, and you can join the Patreon and get in some information that will really, really, really help your trading as far as taking profit in those things. So I guess the main point here to make at the end of this video is if this 2-hour crosses down, it doesn't, even if it looks ugly, it doesn't have to be the worst thing in the world. And then the second part to that is, hey, the 30-minute is suggesting that that is possible. But the first point we pay attention to is 546.13 at that time, right? We can see something like this. That would tell us a lot more. So thank you guys for watching this video. I know it was pretty quick. I know I kind of just flashed through things, but I wanted to make sure to give you guys an update. So hopefully you guys can join me in the morning for an hour over here on YouTube Live. That would be fantastic. But thank you guys for being a part of this community. Thank you for being a part of Patreon. Thank you guys for always being so great in the live chat during our live shows. You guys are fantastic, and I wish you nothing but a great, great night and maybe some good luck tomorrow if you're trying to play some earnings. All right, guys, peace out.